Talk about GYG, one of Adir's favourite businesses to talk about. So we had a big announcement.
I like the food at GYG. You like the food?
I'm not a massive Mexican guy. I quite like GYG.
Well, I got good news for you. It's not Mexican.
What is it?
Well, it's
Tex-Mex.
It's Tex-Mex-ish.
Yeah.
But I think it's actually very nice.
It's good. Yeah, you did a good job.
Debatable.
You like it?
It used to be good.
Oh, you think it's
it's gone
changed?
down?
Yeah, it used
I'm
to be
shocked to hear that.
fantastic.
Really?
It used to be the best burrito going around.
Really?
And now it's all rice.
Isn't it?
90% rice.
Isn't
What
it?
was used to be in there?
That's interesting.
I used to
It's
be able to
like
get a
meat or whatever.
barramundi burrito with
Really?
like all the like beautiful amount of beans, massive amount
Yeah,
of
interesting.
flavour, coriander,
They got rid of it all.
salsa, and now I get a 80% stodgy
That
rice.
could explain why the franchises make so much EBITDA, because they're saving
full
money
of
on
rice.
ingredients.
I am friends with some Mexicans, and they find it very culturally outrageous that GYG calls themselves Mexican.
Yeah.
I think it's quite nice.
So co-founder Stephen Marks pulled the pin on its ill-fated and very costly 6-year expansion to the US just months after claiming the business was on the cusp of breakthrough in the world's biggest fast food market. Investors love the move, sending shares rocketing 26% in days, with the Mexican giant's market cap back above $2 billion. While it remains below its $43 per share peak, it has almost returned to its $22 IPO price. RBC Capital Markets analyst Michael Toner said the US business had very low prospects of being successful and was not expected to break even until 2037 if it continued to operate. Barrenjoey analyst Tom Kirath said the US exit would allow management to refocus on the core Australian businesses. Very few investors saw the US becoming successful, and we think the US losses precluded some investors from investing, Kirath said. The strong Australian performance and growth outlook now become the key focus. So GYG said expected EBITDA was going to be $85 million for the 2026 calendar year, up 29%. Adir, Scott, views on this?
I think it's good. I mean, this is the logical thing. It was pretty obvious to me they were going to shut it. They took a bigger charge than I thought. I thought it would be a $15 million charge for shutting this. It was like 50 mil or something like that. I can't remember the number. It was a big number. I mean, I would say something very positive about Stephen Marks, who I don't know. I think he's a New Yorker or something.
Originally.
Yeah. You know what? CEOs often fall in love with their own ideas, and then the more that people disagree with their ideas and say they're wrong, the more enamored they become, because they want to prove that they're right, and like that's the contrarian nature of founders. I think it was very impressive the way he did this. Like, number one, he accepted the reality. I heard some people inside the business say to me, he should have accepted it earlier. Okay, I don't really buy that argument. Like, he accepted the reality.
Yeah.
That's very hard to do.
It's still going and everything as well.
Yeah, he's still
Still
running,
operating,
and he's
make
basically
mistakes.
just accepted the reality, and then he's been very honest about it. He's done this mea culpa that said we've made lots of mistakes. This is one of the mistakes. I'm shutting it down. It's hurting our business. I really think like founders can look at the way he's handled this for some lessons.
Yep.
In when there's high return, there's high risk.
Yeah,
Some of the
I
risks don't
totally
work.
agree.
I think it's
Yeah.
really good.
I
It's
think
really good.
You don't want to be trying something and then as soon as something doesn't go right, you back out, because you need to give these asymmetric bets a real chance of
Exactly.
succeeding. So I think he gave it a real shot, which is great. He copped the personal fallback,
Yeah.
and then eventually became so obvious he should have had to pull out. And we talked about it literally a month ago.
Yeah.
That I think I said that valuation's being impeded by this US stuff, and that shouldn't be why you do stuff, by the way, because the short-term vicissitudes of the market shouldn't be determining your business strategy. But I think he gave it a real shot.
No, I think it played out exactly the way you said that, what
Yeah.
was going on. I think that we've been largely right about GYG, and I want Scott's opinion on this, but the last line I'll say is, it went up, it was IPO'd, it doubled, it went down, halved, it this, it that, now it's back to IPO. It just reinforces my point about investing, which is founder-led businesses in particular. Form a view about whether you think the founder's great and the business has got great potential. And if you do, buy it and come back in like 10 years and see how it's done. And so if you would do that, you wouldn't have worried about any of these ups and downs and ins and outs.
The irrational $43,
Yeah.
which was never right either. Like we saw it when TDM sold float at 22. Remember, so TDM were long-term holders, long-term believers in this business. We'll get Ed on at some point to talk about it, but they were long-term believers in this business, and they obviously held a view that $22 IPO price must have been somewhat of a full price. They sold down some, not all of their stake. When it went to 43, it was crazy. 2022 has always felt to be a bearish price for this business at this point. It's really, the 85 EBITDA is really sort of a bit irrelevant because of the whole leasing issue. But this is a great business with great powers. So if you look, and well run with a fantastic founder, a great board, great brand, very good scale, Didn't have any of that in the US, by the way. So it had no powers in the US, which is why it kind of made sense.
I
to
agree.
sort of
And
back out.
I think on the branding one, just driving, despite my misgivings about the change in
The
food
rice.
ratio.
About the rice quantity ratio. Exactly.
My daughter is the number one fan, and wherever we go, whenever we see a GYG, we're stopping to get some burritos. We were there on Friday night. So I think
How old is she?
she's 11.
Okay.
Yeah, so we went after netball, grabbed a burrito afterwards, and some nachos.
It's still
and that
way
kind of thing.
healthier than McDonald's.
It's a
or
fantastic
Zax's.
option. I still eat it regularly. I just maybe if they're listening, maybe they can, now that they're not investing so much in the US, maybe they can bring back the barramundi and change the ratio a little bit.
Just say to the person serving you, can you put less rice in it
you-
and more
can
meat?
you-
They'll do it. Like people don't ask enough questions like that.
Scott's secret menu. Is that the?
It's actually
There's no camera measuring the ratio of. Just ask them.
You make a great point, and I think this is about cafes. I'm not a big cafe goer, as you can imagine, but like smart cafes almost always give big helpings. And because the food cost is what, a third of the cost. If your food cost goes from 33 to 36%, but you're giving a 30% bigger helping, think of that as a brand investment. So I go to a cafe, I come out full, not half full. This is such a better way to retain a customer. Think about lifetime value, and so I think GYG making the fact that you've noticed the rice and obviously go there less, that's exactly what they shouldn't be doing, actually. And I'm just really surprised because I know Stephen is really big believer in food quality and customer
Well, he'll
experience.
listen to this. I reckon that you might have had an influence on his decision making on the ratios.
Well, just
It's a very
putting
GYG
myself,
move.
putting myself in the shoes. You know, you're making this big investment in the US, and you're thinking about EBITDA, you think about all that kind of thing. You are going to look, even if you've got that high focus on brand and quality of food, you're going to inevitably shift things a little bit to try and keep things right while you're public.
Have you found this at multiple different GYGs or
Yes.
just one? Okay,
Yeah,
so it's not like just one bad
It's
franchise.
Like I
interesting
said, my daughter's probably one of their number one fans, so I've
Yeah.
sampled a lot of
Okay.
GYGs all up and down the coast of Australia.
Fair enough.
They don't have gross margin problems. Like I'm surprised that
That's
they're feeling the
fantastic, yeah.
need to mess around with it like that. I feel like they've got so much growth opportunity in Australia. Like they got hardly any
Massive.
stores
Yeah,
here
there's
relative.
200 stores out of 1,000.
Yeah, compared to the big players. I will say, like, I just want to reiterate this. Like, there's a Wilson Asset Management Fund, which is a founders fund. It's got some founder money. It invests in founder businesses. Like, I really like that idea without commenting specifically on that fund.
L1's business has been built on that, essentially. They look for L4 and they found it in founders.
Absolutely. And I think it still seems to me the best way that you make a return over 10 years, the best return, is just back founders that you believe in and that you believe have got a great opportunity and stick with them. And like GYG's had a roller coaster. I can say Catapult's had a roller coaster. Doesn't matter if you would have bought the IPO 11 years ago, you're up 20% a year for 11 years. Like, no, what's returning that?
If you bought when Contrarians started, you're up like 70% a year, I reckon.
Probably.
Yeah.
But like, and you know, there could have been times, like we did a placement that was it's a much higher price than the current price. Like I want to get back there so they all make money. I think, you know, that's the ambition, right? And like, but fundamentally, like the market goes up and down based on the people that know least about your business when you really think about it. Like often low volume shifts pricing. And so GYG is a great example. If you believe it's a good business, I think it's a good business. Like you just buy it and you come back in 10 years.
If you're an investor though, are you hanging out, like looking at the roller coaster of GYG, are you hanging out a bit longer after IPO when all these growth plans are on the table? I haven't followed GYG too closely, except for on the food front. But are you hanging out? Are you hanging out and waiting for the IPO? There was talk about expansion to the US. That was a big part of the sell. Are you waiting a little bit to get good pricing that bakes in a bit of downside risk? Because you could have mistimed this in a few ways if you got in at the wrong
but
points.
like the thing is this. This is a long paragraph to say, should you try and time the market? That's really the question you're asking, right? But you just want to use up your word count,
I think I said a lot more than that in that comment.
You said, it's good, it's got this, it's got that, it's going up, it's going down, it's going in, it's going out. Should you try and time it?
Hang on. Should you, in founder-backed, to riff on what you're saying about founder-backed businesses, do you wait a little bit longer after IPO?
I see.
Knowing that you're going to back them? I mean, we were talking about Karma the last time I was on, I think. It's a founder-backed business.
Yeah.
It's down off IPO. If you back the founders, do it's the right move to have waited a bit?
Well, if you would have backed the founders at IPO of GYG, you would have doubled very quickly, and then you would have thought, "Oh my God, why didn't I buy it at IPO?" So I'm like, I understand. Maybe a slight variation of that point is, if a business is coming to market and insiders are dumping a ton of it, what should you think about that, if anything? Because I don't know if you remember GYG.
Yep.
They upscaled everything, and like TDM, who was like really the cornerstone investor, TDM were not going to sell it, they were going to sell a bit, and then they sold more. But I don't think that's a reflection of the way, from my conversations with TDM, it's not a reflection of how they feel about the business. They're very big believers in the business.
They might have had Fun Life or something playing into it.
No, they've got indefinite fun.
Yeah, okay.
Yeah, I think
There you
they
go.
basically just thought, well, we've invested in this and we've made a lot of
They
money.
thought it was
we
above
should
the,
take
it was
off
above the intrinsic
table,
value.
you know?
I don't think it's any more than that.
And so this is how I feel, and maybe karma I'll put in the same basket of most things. Like, I think that unless you look at it and there's a very obvious orange, I'm going to say red flag, orange flag. An orange flag could be the founders are selling down tons. That might make me a bit nervous.
But
Or
founders should be allowed to sell down a little bit, right?
They should, of
Take some money
course.
out. Yeah,
I think they're
just to-
crazy if
it's
they're not selling down
tons.
Yeah, I think when I invest in business, it's always secondary. I always give it to the founders because then I think, now you feel a bit safer and we can grow the business harder. So yeah, but another sign is what you've just said, which is if I looked at this business and I thought the US is a joke and like it's hurting them, I should just wait till they shut that thing. In the meantime, it's going to drag them down. I just think that is one of a whole lot of factors. I think it would be a big call to wait for that. And I think that if I was a believer in GYG, I would have happily bought their IPO and put it in the drawer for 10 years and ring me in 10 years. And the thing is this, what if you bought GYG at, what would it get you? $44, right?
43, yeah.
43. What if you bought it at 43? Well, you would have lost half your money. And then like the mathematicians amongst us would say, now it has to double to get back to where you started. And I would say, but if you really believe in this business, you think it might 5x plus off the IPO price, maybe more. And so, yeah, like don't engage with the ups and downs. Form a view, have a thesis, invest in it. And unless something changes with a thesis, like the founders leave or they do crazy, they go into water parks or something, I don't know, like something totally different, right? Like I think that you should just form a thesis on the business and the founder.
At $43, there was no margin of safety. That was a crazy valuation. That was a $4 billion plus
I agree.
valuation.
So I wouldn't have bought in at that
Made no,
price,
for a business
right?
that makes like no impact.
And
So
we said that. We said it's
what
too
I love
expensive.
about GYG, the most important thing for a franchise business is the franchisees making money.
Yep.
And that's the
Yep.
absolute indicator. We know with Domino's, all the franchises lose money and it dropped 90% or whatever it dropped.
Subway hard to make money.
Well, no, Subway you make okay money. But
but
Macca's is obviously McDonald's been the best performing fast food business ever, and that franchises made the most money. And GYG is more profitable for franchisees than McDonald's in many cases. So I've always been huge bull based on that and that alone. Because as long as your franchise is making money, you've got plenty of TAM. You can just pop up new stores because there's more people. So if you're making $3 million, $2.5 million as a GYG franchisee, that's unbelievable.
And if your franchisees are making money, they shouldn't have to do things like rice stuffing your burrito.
I'm glad you brought that up and not me. I didn't
the whole rice thing
that's-
just makes it. I just don't get that. It's so out of brand for GYG. I'm sure Stephen will hear this.
But the
fix it.
the best per store revenue is a non-franchise business.
Yeah, well,
Chick-fil-A.
I was about to say Chick-fil-A is number one.
Yeah, and that's a non-franchise stores, company-owned stores,
And only open 6 days a week, as you famously pointed out.
I mean, look, there was a lot of noise about this GYG IPO because there was Baron Joey involved in it. Once they got
It's a
involved,
retail business.
and exactly, and then there was all the we can do drive-through better than anyone knows how to do drive-through.
Yeah.
We can do, we got this US. There was a lot of noise. Fundamentally, they're a business that has nice margins with a very big TAM in Australia and a big opportunity to expand. And if they can execute well, it's going to go well. Do I think it should be valued differently to other similarly growing quick service businesses? Probably not. But I do think that there's a big opportunity with this business in Australia.